Hi, welcome back to Joe Blogs. This video is the next in a series looking at the financial implications of Russia's invasion of Ukraine on the global economy. And in today's episode, I want to give you an update on what's happening with the Russian economy. We've just had the figures released for January, and it is the worst single month in Russia's history. Since records began being published in 1998, they have not had a single worse month than they saw in the month of January. So in today's video, I'll have a look at the official figures that have been released by the Ministry of Finance from Russia, so there can be no confusion as to where these figures came from. They've actually been published by Russia, so I can't be accused of actually making this up, putting spin on it, trying to tell you that it's actually worse than it is in Russia. These are the actual figures that have been published, so we'll go through those in some detail. We'll then dig down and have a look at exactly what's driving this fall in revenue from Russia's perspective. And then finally today, I'll wrap up with my summary. So what I think is likely to happen with Russia over the course of the next 3 to 6 months, because we've had a lot of sanctions coming into place over the course of the last couple of months, and they're now starting to feed through in terms of the performance for the Russian economy. And I think it's likely to get worse over the course of the next 3 to 6 months. But I'll pick up on that point more in my summary at the end of the video. So before we get started today, if I could ask you for a thumbs up at some point during this video, if you're enjoying the content, please subscribe if you haven't done so already. Don't forget, I always include chapters, so if you don't have time to watch everything, you can pick and choose what you'd like to see. And if you'd like to support the channel, please have a look below where you'll find links to YouTube Super Thanks and membership, as well as Buy Me a Coffee and Patreon. And I'd like to say thank you so much to everyone that has supported the channel. And that support has helped me to provide this, which is the Joe Blogs sign, which I wanted to bring in just to add a little bit more ambience, a little bit more light, a little bit more fun, and also to remind everybody what the channel's called. Slumping energy revenues and soaring expenditure pushed Russia's federal budget to a deficit of 1.76 trillion rubles, which is around $25 billion, in the month of January, as sanctions and the cost of Russia's military campaign in Ukraine choked the economy's prospects. Figures published by Russia's finance ministry showed that revenues were down by more than 46% to 426 billion rubles in January, compared with the same month from 2022. And this shortfall has been attributed primarily to the lower price being achieved for Russia's oil sales and also the lower volumes of natural gas exports. Non-oil and gas revenues were also 28% lower at 981 billion rubles, which is attributed to lower domestic VAT and income tax. Overall, budget revenues for January were down by over 35%, while spending was up by almost 59% to 3.1 trillion rubles, which is already more than 10% of the full-year spending plan for Russia. The Russian economy relies on income from oil and gas to fund its budget spending and has been forced to start selling international FX reserves to cover a deficit stretched by the cost of the Ukraine conflict. Now, interestingly, the Russian finance budget for 2023 is based on an average price for Russian oil of $70.10. And this compares to the oil price cap that's currently in place of $60 and the average sale price that Russia achieved in January of $49.48. So the price currently being achieved by Russia in the markets is almost 30% lower than the figure that it's budgeted for the whole of 2023. So that tells us that Russia needs to see a significant increase in that sale price, and it actually has to go above the oil price cap in order for Russia to be able to meet its budget. January's deficit already represents 60% of the whole year plan of 2.9 trillion rubles, and analysts expect the shortfall to widen to more than 5 trillion rubles if current conditions persist. Russia's main sources of covering the budget deficit are domestic borrowing, which it stepped up sharply in the final quarter of 2022. Now, as we all know, one of the consequences of Russia's invasion of Ukraine is that we've seen high levels of inflation all around the world. Smart investors are now looking at what big players are doing to preserve and grow their wealth outside the usual places of the US dollar and traditional investments. Now, as I think we're all aware, Russia has large reserves of gold, and that's considered to be an alternative asset. And according to a recent study, institutional investors like BlackRock and Goldman Sachs are now putting up to 50% of their assets into alternatives. So those alternatives certainly include gold, but they also include an unexpected form of investment, fine art. Because the last time that inflation was this high, fine art appreciated at an average of 20% per year, according to the MW All Art Index. So you may be thinking that investing in fine art is fine for BlackRock, who have access to billions of dollars of cash. But how can I actually get involved myself? Well, that's exactly what Masterworks was created to do. Masterworks offers the opportunity to invest in shares of major artworks by people like Picasso and Banksy. Masterworks have created a really interesting business model whereby they buy the work of art, securitize it, and allow you to invest into a portion of that art by buying shares. Then if Masterworks sells that work of art at some point in the future at a profit, you'll be given your percentage share of that profit. And Masterworks has recently sold 3 paintings for 13.9%, 10.4%, and 35% net returns to investors respectively. Now, obviously, I'm not providing financial advice, and you need to do your own research before investing. But given Masterworks' recent performance, they usually have a wait list, and some of their offerings have sold out in minutes. However, you can skip the wait list right now by clicking on the description below. This table shows the official figures published by the Ministry of Finance from Russia for January 23. Now, all of these figures are quoted in billions of Russian rubles, and to give you an indication, the exchange rate between the ruble and the US dollar is currently around 70 to 1. So as you can see, total income for the month was around 1.4 trillion rubles, which equates to around $19.4 billion. However, this compares to income of 2.1 trillion rubles, or around $30 billion in January 2022, and represents a fall of more than 35%. So this shows the direct impact of the sanctions that have been applied against Russia. The invasion of Ukraine started on the 24th of February, so the figures for January 22 don't include any of the sanctions that started around March time. So anybody watching who's not sure whether or not the sanctions are having any effect, this shows you the direct impact so far. And in terms of where those sanctions have been targeted, it's primarily on the oil and gas income. And you can see that the revenue from oil and gas in the month was 426 billion rubles, which is around $6.1 billion. However, that figure compared to sales last year of 795 billion rubles, or $11.4 billion. So that represents a shortfall of more than 46% compared with this time last year. Now, the next line in this table is described as basic oil and gas revenues and actually shows a 32% increase year on year. However, no details have been provided as to what this relates to. So I'm not entirely sure what part of the oil and gas revenues are actually up 32%. But if we look at non-oil and gas revenue, you can see that the figure for January 23 was 931 billion rubles, which equates to just over $13 billion. And that compares with the figure from last year of just under 1.3 trillion rubles, which is around $18.5 billion. So represents a shortfall of over 28% year on year. And you can see that the Ministry of Finance have provided some detail as to how that figure was calculated, and they're showing the VAT and the income tax amounts. Now, VAT is charged on goods and services within Russia, so this really gives us an indication as to how the economy is performing, whether people are spending a lot of money or not. And you can see that in the month of January, the VAT income was 379 billion rubles, which equates to around $5.4 billion. However, that figure compares to 693 billion rubles, or around $9.8 billion from January 22. So that represents a shortfall of more than 44%. So that means that the economy is doing far worse this year than it was in January 2022. People are spending less money, there's less activity, and therefore there's less VAT being charged on all the goods and services. And when you look at what's happening with income tax, that tells us that there are real problems in the Russian economy. The revenue figure for income tax has actually been recorded as a negative figure of 72 billion rubles, which equates to just over $1 billion. So essentially that means that the Russian ministry has not taken any income tax in the month, and actually it's given refunds of over $1 billion. So that really gives us a good indication as to what's happening in the economy. And if we compare that with the situation from January 22, you can see that the income figure was 65 trillion rubles, which is just under $1 billion. And because we've gone from a positive figure last year to a negative figure this year, the deficit that the ministry is showing is actually more than 100% negative. If we now move on to expenditure, you can see that total expenditure in January was over 3.1 trillion rubles, which is around $44.5 billion. And that compares to a budgeted figure of around 1.9 trillion rubles, or just over $28 billion. So that means that expenditure was almost 59% higher than the budgeted figure for the month. And if you look at the figure on the far right-hand column of this chart, that shows the full year budget for 2023. So you can see that total expenditure is forecast to be just over 29 trillion rubles, which is around $415 billion. So the total expenditure of 3.1 trillion rubles in January represents around 10.7% of the full year budget. And as there are 12 months in the year, you would have expected the monthly expenditure to come in around 8.3%. So this is a significant overspend in the month at the same time as there's been a significant shortfall in revenue. So this is a double whammy from Russia's point of view. And in terms of the details of where that expenditure is going, we've only been provided with details of state procurement. So these are things being purchased by the central government. And you can see that in the month, state procurements were just over 1.3 trillion rubles, which equates to around $18.6 billion. And that compares to a budgeted figure of 249 billion rubles, or $3.6 billion. So the overspend in the month on state procurements was more than 5 times the budgeted figure. And when you compare that to the full year budget of around $5 trillion, it represents around 26% in 1 month. So this is a significant amount of overspend in the first month of the year and really doesn't set the tone well for the rest of 2023 from Russia's perspective. They have spent a lot more than they were expecting to in January. And if we now look at the net spending in the month, which is the difference between income and expenditure, the net outflow was more than 1.7 trillion rubles, which is around $25 billion, compared with the budgeted profit of 125 billion rubles, or around $1.8 billion. So that represents a shortfall against budget of around 1.9 trillion rubles, or almost $27 billion. So this represents serious underperformance in the first month of the year. And when you look at the estimated full year loss of 2.9 trillion rubles, the performance in January represents over 60% of that forecast loss. So Russia's going to have to do significantly better in the next 11 months of 2023 to come in at that 2.9 trillion loss figure. This chart shows total Russian revenue from crude oil sales over the course of the last 12 months. And in terms of the focus of this video, I'm really just looking at what's happened in the month of January. And the dotted line on this chart marks the 5th of December, which is when the European Union brought in its ban on the purchase of all seaborne crude oil from Russia. So a full ban is now in place for all 27 countries that make up the European Union. They can't buy crude oil that's transported over the sea. There are a couple of exemptions in terms of being able to take deliveries through the pipelines, but that's because those countries are struggling to be able to find alternative suppliers. But none of the countries can buy any seaborne oil, and you can see the dramatic impact that that has had on Russia's revenues over the course of the last month or so. And in addition to the European Union ban, the oil price cap of a maximum $60 for Russian oil came into effect on the same day. Prior to these sanctions coming in, Russia was earning around $300 million of revenue per day from crude oil sales. However, that figure is now down to around 200 million, so that represents a fall of around 30%. If we now look at the situation with regards to refined oil products, and refined oil products are basically all of the different fuels that we use on a daily basis, such as gasoline, diesel, kerosene, all of those sorts of things. And this chart shows Russian revenues from refined oil sales dating back over the last 12 months. Now, the European ban on the purchase of refined oil products didn't actually come into effect until the 5th of February, so after this chart. But you can see that prior to the ban, there was already a fall in Russian revenues from refined products. Back in March 2022, Russia was earning around $200 million of revenue every single day from the sale of refined products. However, that figure is now sitting at around $130 million. However, if you look at the breakdown of this chart, the large blue section at the bottom represents purchases from the European Union. So they have now all been completely banned as of the 5th of February. So if you remove that section from this chart, the total revenue that Russia is earning would drop to around 50 million euros compared to 200 million back in March last year. So this represents a significant impact on Russia's revenues. And in addition to the European ban, there is also a price cap that's now been introduced for refined products that came into effect on the 5th of February. So that means that the sale price of all of the remaining refined products that Russia's selling to the rest of the world will now be lower because they'll have to come in below that price cap as a result of the fact that Russia is still using ships and shipping services from the West to actually transport all of this fuel. So this is going to have a huge impact on Russia's revenues over the course of the next few months. So what's the summary and conclusion today? Well, I wanted to post this video really to give you some data to show you exactly how the Russian economy is getting on, because I think there's a misconception in the market that Russia's actually doing quite well, that the sanctions aren't having any impact, and actually they're hurting the West more than they're hurting Russia. Well, what we've seen from today's data is that that's not true. Russia is doing very badly. These are the worst figures that Russia has ever published, dating back to 1998. This is the single worst month that it's ever experienced. And when we looked at the data and went through those numbers, you can see that it's impacting on all parts of the Russian economy. So oil and gas revenues are obviously the hardest hit. They were down by more than 46% against this time last year. But other income was also impacted. Total income was down by 35%. And when you look at what's going on with regards to VAT and income tax, that really gives us a good feel as to what's happening in the Russian economy. VAT in January was down by 44% compared with this time last year, and income tax was actually a net deficit. So the Russian authorities are having to give people rebates to keep them going rather than taking any tax from them. And of course, that's going to have a big impact on the Russian economy, because if they're not taking the same level of taxation from all of the VAT and income tax, then that means that they're going to have to draw upon their reserves to pay for everything. And when you look at the expenditure from the central government, it's off the scale. The figure that we looked at was more than 5 times what they spent in January 2023. So that means that they're having to dig into those reserves to pay for all of that. And of course, this is the funding of the war, because it's very expensive. And Russia has been ramping things up in terms of the military conflict over the course of the last month or so. So when you look at the figures for January, they're obviously bad in isolation. But when you look at the general environment right now and take a look at what's happening with the sanctions, it's likely that the figures are going to get worse in February, March and April, because the January figures did not include the European ban on the purchase of refined products and the price cap that's applying to those products as well. That ban came into effect on the 5th of February. And as we saw earlier in this video, the European Union was still buying around 60% of all of Russia's refined oil sales in the month of January. So now that that ban's in place, it's likely that the February figures will be much worse than the January figures, because we've now got the cumulative impact of the crude oil price ban and price cap that were brought in on the 5th of December, along with the refined ban and cap that were brought in on the 5th of February. So this is only going one way from Russia's point of view. And in terms of expenditure, well, the war is carrying on and Russia is still increasing its expenditure. So it's likely that in February and March, we will see a continuation of this trend, expenditure going up and income going down. So over the course of the next few months, all we will see is Russia continuing to dip into its reserves to pay for all of this. But of course, that's a short-term measure. You can't keep doing that, because at some point your reserves run out. And that's exactly what's happened to a lot of other countries all across the world in the last 12 months. We've been talking about Pakistan and Sri Lanka and Bangladesh all needing bailouts because they've run out of cash. Now, Russia obviously has significantly more reserves than any of these other countries, but at some point, even the wealthiest of reserves will run out if you continue to run a deficit. So hopefully the information that I've shared with you today gives you a better understanding as to what's actually going on in Russia. We're seeing revenue falling at the same time as expenditure is increasing, and all of this represents bad news for the Russian economy. So hopefully you've enjoyed today's video. If you have done, please give me a thumbs up, and thank you for watching this video all the way through to the end.